Piper with the weekend video clip, and it's Saturday the 15th of October. I thought we'd start with a pound dollar this morning. Other markets are sort of just doing the same they've been doing for some time now. Obviously we had this big fall in the pound. I haven't really commented on that. Not a market I trade that much. I mean, I've been diversifying out of sterling into dollars, euros, gold and silver for a while now. Still got too many pounds, sadly. Nevertheless, when I wrote Trading Triangles back in, I think it was 2012, maybe earlier than that, so I was talking about this big triangle on the pound dollar. Now, at the time, I think I did forecast parity because we had this great big fall there. We then had the triangle, which was corrective, and we had the break. Now, in the event, the break wasn't that dramatic. One of the things I did in the book was perhaps, one may say, a bit foolish, but I predicted various things. Not predicted, I gave various signals, gave my projections. I would have been perhaps more sensible to use past examples that had come true, as it were, but I tend to sort of I go where angels fear to tread, as it were, sometimes. Well, I think it's a better, well, that's the way I do things. Anyway, we had this big move, 2.1 down to 1.35. That's 0.75, and I was saying, well, here we are about points. Well, we came from here. That was a peak, 170. So therefore, move to parity was correct. I must say, I haven't actually checked that I said that, but it seems an obvious conclusion. I've just released the details of my bumper sale, which I hope some of you find of interest. Trading Triangles is part of that, as is all my books, in fact, unless I've forgotten some. But what actually happened was we then got this one rally here, which gave us an A wave on the triangle, a B wave of the breakout, and a C wave here. And now it's also, and of course resistance was actually that level there, is what we saw, and we've come shooting down. So nothing's really changed, and parity remains a valid call based on this fall here. I mean, if you look at, you could decide it's a percentage terms thing. So, I mean, if you look at the percentages, then this fall here would be 0.75, about a third. So, if in fact if we go on percentages, then a third of that is actually less than the full 75 cents. So, in percentage terms, if we see a similar 1/3 knocked off from here, approximately, you get down to about 1.13. So, still a fair way to go, but not parity exactly. So it depends how you look at it. And I'm not saying that either one is right or wrong. It's because we never know for sure what's going to happen. But certainly, it's not looking good. I mean, we have a 1, 2, 1, 2, third of a third coming in now, obviously. So I think parity is actually very possible. 1.13 is also very possible. Good for the UK, increases the economic viability of all our businesses, more competitive, etc., etc. I mean, I think the war of the currencies is certainly being won by the UK at the moment. I mentioned this before, that these countries like to have weak currencies, so the UK is an outright winner, but of course it doesn't actually suit people like me living in Spain. And there are winners and losers in all these things, but it's probably good long term. I mean, the whole Brexit thing was kind of a nonsense, really, with these arrogant politicians, Eurocrats, making rather childish statements. It's unbelievable, really. And then you've got the US election, which is another, well, complete farce, really, as I said in my report the other day. Anyway, I think markets are going to come tumbling down fairly soon now. But exactly when is, of course, a problem, and the way the other markets are lurching around. But there's no sign this is over as yet. I think we've got further to go. 1.13 is a good target. Parity is not a good target. So if 1.13 doesn't hold, then parity would be my next suggestion. Let's go down the leg edge, just check out the more recent action. Right, the previous chart was a monthly chart. This is now the daily chart. Here's the peak we were talking about. So that's a 1, pretty impulsive. 2, 1, 2, 1 of 3, I would think. 2, so this is third of 3 of 3. Doesn't look over yet. I mean, obviously markets can do what they want to do, but certainly in Elliott terms, it looks like we have more to go. I suppose this could be a 1, 2, 3, 4, 5, but doesn't really quite fit in with this one wave, which is stronger. Anyway, I think the target's slightly below us. Possibly the worst is over, but I wouldn't even necessarily guarantee that at the moment. I think clearly this is a solid downtrend, and it's going to disrupt. Currency disruption tends to lead the way to stock market disruption, as in 87, and there's certainly a lot of disruption going on right now. Right, the Dow, it's all about this triangular formation, as far as I'm concerned at the moment. So what we've seen is we've been going sideways since early September. We saw the false break there. We broke out to the downside, looked more substantial. Actually got close to the upper parameter, but it's broken back down again. So again, pretty negative really, but the markets are just jerking around. It's difficult to make any kind of firm projections, but that is a bit negative. If we keep going down Monday, then it could accelerate. I don't see many positive in that pattern, other than of course we've got the low there, and this is now a failed retest. But I think the failure to hold this line here is, I mean it's a positive it actually broke through, but it's a negative that it then fell back again. But it's a kind of market we're seeing that not easy to trade, to say the least. I think unless you're pretty experienced, you want to avoid this kind of stuff really. Right, final word on the Dow. If you're experienced, you'll be avoiding it anyway. I think it's fair to say. If you're not experienced, then you're better just not bothering at all. Now, FTSE is quite interesting because we have got this 5 waves now. 1, 2, 3, 4, 5 with a fail break there. That's quite a good sell signal. Pretty impulsive decline. Bounce back. So that is definitely a shorting opportunity. So the market, I don't mean that level, I mean that what we're seeing here is a shorting opportunity. That's definitely the place to have stops above that level there. So look at the short-term action since the peak. Okay, well I think there probably are 5 waves there, but it's fairly, I'm sure the way it's gone there must be, but this is an A, B, C. So certainly shorting FTSE come Monday morning is one trade I'll be looking at quite carefully. Depends how it pans out. I mean, it's hard to predict, but I'll be looking for low risk opportunities to short FTSE on this basis. It looks like we could see a major peak there, and that we're now going down. The DAX has continued its rather jagged route. I mean, we've just been going sideways again since August, really. This is the 3-hour chart. I mean, it's okay. We've got a very clear 1, 2, 3, 4, 5. This all looks highly corrective, but it's not managed to rally. So hard to make any kind of call on that at all, really. I don't plan to actually. I'm giving up at this. Alright, finally gold today. This is the 200-day moving average I've been talking about for a while now. However you count this, I would say it's a 1 to there, 2, 1 of 3, and then A, B, C, A wave, B wave, A, 1, 2, 3. This is not very encouraging. The market is basically bouncing. It's now gone below the 200-day moving average. It's now bouncing to the upside, trying to bounce the upside. Maybe we'll break through as a 4th wave, another move down, 5th wave. The best I can say here is that if this is corrective, then this sell-off will be the worst. The worst is behind us. But there's no real sign we're bottomed yet. So, I mean, I think a fake out to the upside followed by another decline would be to finally shake out all these people who've been emailing me endlessly about how gold's going up and up forever and 10,000, etc. They may be right, but everyone needs to be shaken out before that can take place. So I remain positive on gold long term, but in the shorter term, it's looking a bit iffy to say the least. And as I say, the fact that gold has broken down and can't break back up again at the moment is certainly a negative. I'll just quickly look at the shorter term actions of the daily chart. Right, obviously it's now the 200-hour moving average. So it had a low there, quite a nice spike there, now 1240. Another spike there, but spike there. There's really nothing much to go on. It's now been going on for a while. This move, certainly a week or so. I mean, okay, we have got a double bottom of sorts, but we need to see something a bit dramatic, and even then, it still can't. Even a rally now to there will count as a fourth wave, unless it were particularly a lot stronger than a corrective move. Anyway, rather longer than I'd thought today. Hope you found that interesting and useful. Back to the report on Tuesday morning for subscribers. Have a great weekend. I hope you are interested in my bumper sale. I try to make it as attractive as possible. Please let me know. I would like some feedback. I've obviously had some feedback, but the more I get, the better. Thanks for listening, and have a great weekend. And bye for now.